If you're running your own business, here's the hard truth. Skipping your quarterly estimated tax payments isn't just risky, it's costly. The IRS expects you to pay taxes as you earn income throughout the year. If you wait until April to pay a lump sum, you'll almost certainly owe penalties and interest. That's money leaving your business unnecessarily. And if you're like most entrepreneurs, that's cash you'd rather reinvest or keep for yourself. Right now, understanding and managing your quarterly estimated tax payments isn't optional if you want to stay in control of your finances. You might think, I'll just do it later, or my accountant handles that. But the reality is, knowing how to calculate and pay your estimated taxes yourself is a game changer. It frees you from surprises, gives you clarity over your cash flow, and keeps your business compliant with the IRS rules. Let's get into exactly how this works. The IRS requires quarterly estimated tax payments if you expect to owe $1,000 or more when you file your annual return. That includes income tax plus self-employment taxes. The IRS doesn't want to wait until April 15th to collect. Instead, they want you to pay roughly every 3 months, April 15th, June 15th, September 15th, and January 15th of the following year. This system helps you avoid underpayment penalties and keeps your tax liability manageable. There are 2 main methods to calculate what you need to pay each quarter. Method 1 is the safe harbor approach. Simply pay 100% of your previous year's tax liability divided evenly into 4 payments. For many business owners, this is the simplest and most reliable way to avoid penalties. For example, if you paid $12,000 in taxes last year, you'd pay $3,000 each quarter this year, no matter how your income fluctuates. This protects you even if your business grows. Method 2 is more precise, but requires accurate forecasting. You estimate 90% of your expected total tax liability for the current year and split that into 4 payments. This method can save you money if your income is lower this year than last, but it requires you to regularly update your projections. You'll need to gather your current income, deductions, and credits, then plug them into IRS Form 1040-ES worksheets or a spreadsheet you build yourself. For example, if you expect to owe $10,000 for this year, you'd pay $2,250 each quarter. To make this process easier, I recommend creating a simple spreadsheet where you track your income and expenses monthly. Then, every quarter, you update your estimated tax calculation. This gives you ongoing clarity and avoids surprises. When it comes to actually paying your taxes, the IRS makes it straightforward. You have 3 main options. First, IRS Direct Pay. It's free, simple, and you can make one-time payments directly from your bank account. This is perfect if you want to pay on the due dates without setting up anything complex. Second, the Electronic Federal Tax Payment System, or EFTPS, is ideal if you prefer to schedule recurring payments in advance. It requires enrollment, but once set up, it automates your quarterly payments so you never miss a due date. Third, don't forget your state taxes. Many states have their own portals for estimated tax payments. Check your state's Department of Revenue website and register for their online payment system. Paying state estimated taxes on time is just as critical as federal. A big mistake I see business owners make is waiting too long to start paying estimated taxes. They either underestimate their income or assume they'll owe less than $1,000. This leads to big surprises, and penalties come tax time. Another common error is failing to adjust payments when their income changes mid-year. If your business takes off in the second quarter, you need to adjust your payments upward. Otherwise, the IRS will penalize you for underpayment. Also, some owners forget about the January 15th payment for the fourth quarter of the previous year. This catch-up payment is often overlooked, but it's required unless you file your annual return early. Here's what I want you to do right now. Pull up your last year's tax return and find your total tax liability. Divide that number by 4. That's your baseline quarterly payment if you use the safe harbor method. Then mark your calendar with the 4 due dates. If you're not already registered, go to IRS Direct Pay or EFTPS and set up your account. Even if you don't pay today, getting registered removes a barrier so you can pay smoothly when the time comes. Mastering your quarterly estimated tax payments isn't just about avoiding penalties, it's about owning your business finances. Once you're confident here, you'll be ready to streamline your accounting and even explore tax-saving strategies. Next, we'll dive into how to track your income and expenses accurately throughout the year so your estimated payments stay on point. No guesswork, no surprises. Take this step now and you're building the foundation for smarter, stress-free tax management.